crypto fades along with risk assets as the Russia-Ukraine conflict intensifies. Despite many benefits to citizens, lawmakers discuss crypto regulation to prevent bypassing of sanctions. And options markets catch a bid as gamma performs well and cross-asset volatility rises. All this and more in this week's Crypto Insight. Crypto this week, what's been happening? Obviously, crazy turmoil in markets in general. Lots going on. At the start of last week, which happened to be the end of the month, end of February, we did see a pop, right? And that pop in crypto was due to Putin announcing capital controls, okay? And the idea was that there was a big flow out of the Rouble into Bitcoin that was driving that, and people were really seeing the value of crypto as a way of kind of protecting yourself from various issues, right? One of them being the collapse of your local currency, but then also arguably ways to circumvent sanctions and kind of do what you need to do and buy goods and services with crypto because you can, whereas you can't necessarily access your bank accounts as easily. You can't withdraw enough money, things like that, basically, right? So those were the reasons being touted for that pop in crypto at the end of February. Now, since then, we've faded, right, pretty hard. Risk assets have remained weak, and crypto is still trading a bit like a risk asset. And we've had a lot of noise from lawmakers, right, in the US and in Europe even, talking about Russian individuals using digital assets to bypass sanctions, right? And we need more regulation around crypto and things like that. And then Biden's due to sign some executive order on crypto regulation, which has got markets a bit nervous, basically, right? So that was the latest sort of downtick that we had in crypto. It was kind of catalyzed by that, okay? If you look at the levels, 46K seems to be the big hurdle to break on the upside. That's now sort of a bit of a double top level that we've seen. I think 3600 seems to be the kind of key support zone, which if broken, then opens up the way towards this ultimate level that we may be able to stretch to at around 29K, basically, right? That's kind of the ultimate level that everyone's waiting to probably, feel their boots at, right? Which ironically means it will probably be a level that breaks and overshoots to 25, but let's see what happens. I also think the negative correlation to gold is back. So as gold's been trading pretty well, crypto's been struggling a bit on that, right? I definitely think there's a decent amount of switching between gold and Bitcoin back and forth. And people are looking at gold breaking 2000 and that kind of catalyzes a bit of a switch out of crypto assets into gold, I think, right? So I definitely think there's people who manage money who hold both of them in their portfolios and kind of switch back and forth a bit. Okay, so that's kind of what I'm seeing in terms of Bitcoin. I mean, Ethereum, like I say, moving very much in line, no real story in itself. If you can see that's the Bitcoin Ethereum spread. It's been pretty low vol. It's not done much. So Ethereum's kind of moving in sympathy with whatever Bitcoin does. I did read some interesting stuff with regards to kind of the use cases of crypto that have come about, that have transpired here, and for the world to see in this whole crisis, basically. I thought it was worth mentioning, right? NYDIG put out a nice sort of summary on this, so kind of, highlighted the points from there. So obviously, as many Bitcoiners have been pointing out, the conflict has, really shown people why crypto assets exist and why you should care about them and you should be a user of them, basically, right? And the impacts that have been evident so far, obviously I mentioned that you had some Russians kind of piling out of the ruble into Bitcoin, okay? But if you look at what's going on in Ukraine, you've had donations. So the Ukrainian government was able to raise tens of millions quickly, right, by posting Bitcoin and Ethereum addresses on Twitter and requesting donations. And individuals from all over the world have been able to seamlessly send support without any restrictions, okay? And without any banking delays or anything, right? So that's a pretty amazing, and we saw that similar sort of thing with Canada in terms of the convoys, the trucker convoys. They were able to raise some quick funds as well. So, I mean, it's an amazing kind of function and technology that has enabled people to raise money from all over the world, right, really quickly. Also then the medium of exchange, right? FX markets have been frozen, limited cash withdrawals, platforms such as PayPal are prohibited in Ukraine. So what the hell is people supposed to do, right? So citizens are actually using Bitcoin to make purchases. And there was an example of some Danish journalists, apparently, who landed in Ukraine and bought a car with Bitcoin that they can then use as they're over there covering the war, basically, right? Which is pretty nuts, right? That they can do stuff like that. And then the last one is actually enforcement, which kind of goes against a bit what Biden and lawmakers are saying, right? So large crypto exchanges like Coinbase and Binance have blocked accounts of sanctioned customers, such as Russian oligarchs, for example, whatever, right? Suggesting that the whole regulation needed narrative is not really true, because these exchanges can block them and they can't do shit with their crypto, basically, right? So I don't know. I found those observations pretty interesting, right? And then if you look at this sort of spike in volume that you had on Bitcoin Rouble as being blamed for the spike in crypto last week, if you look at the actual numbers, apparently, you know, on Binance, which is like where most of this stuff trades, you know, only $60 odd million of volume went through on Binance in that pair, Rouble versus Bitcoin, whereas you had a 75 billion move in the market cap of Bitcoin, right? Now we know, you know, those numbers don't need to match, but the point being that it was just more of a sentiment move, right, than actually a large scale, large volume move, you know, by the Russian citizens into Bitcoin. I think that will be ongoing as more and more of them realize that they probably need some of this stuff. But so there probably will be a lasting impact over time. But it was probably just more the sentiment that, oh, look, more evidence, more proof that crypto is seizure proof, and, you know, all these Russians are going to be buying it now, so let's buy it. And that's why we had the spike. And that's kind of probably why it got faded, because a lot of the buyers were probably not Russians who need crypto now and are going to hold on to it. There's more people speculating on the move and just trying to puff the price higher, basically, right? So that's kind of what it looks like. All right, so that's kind of what we're seeing in terms of the price action and the narrative and the news flow. If you then look at the on-chain metrics this week, you know, they were delving a lot into, you know, what they're seeing in terms of exchanges, right? And volumes on exchanges and stuff like that. And then also what the kind of different cohorts that hold crypto, where they're looking in terms of P&L. So, you know, here you've got on the top right chart, you've got realized price for short-term holders. You've got the hodler implied price metric. And then you've got market realized price, which is everyone who owns it, basically, at what level, what's the average level. And that apparently acts as quite a strong long-term support when prices crash. Okay. But what this says to me is, you know, you've got the short-term holders holding on to about 15% unrealized loss right now. So that cohort is definitely still there, maybe needs more stopping out. You've got the hodler implied price kind of where we're trading around this level, around 38, 39K. But these guys have probably got much more pain threshold. So if the market does drop, you know, I wouldn't expect the long-term hodlers to be puking it down 10, 20%, basically, right? Now, if it was to break 25K, which is this market realized price, that's when your long-term holders might have an issue and might start to change their opinion on that, right? But I think you've got quite a big cushion there. If you then look at the charts on the right, this is a profit and loss by return bands. It's kind of showing you, again, metrics that kind of show you that capitulation when markets go down. So you can see the short-term capitulation events in the past, you know, have kind of breached 1% market cap in terms of losses. We haven't really got there this time round, right? So suggesting that, you know, if you look at previous real big market bottoms and capitulation events, we haven't really reached the same amount of pain from the short-term holder cohort. which leaves room for that flush out I've been talking about to kind of 30K, where we may see a spike down in this metric into that area of -1 to -2% of market cap, right? Which will then give you, again, more of an indication that a major bottom might be in, basically, right? But here it doesn't really feel that way. And, you know, we've been saying that even if we were to get a rally over the next couple of months in crypto, for whatever reason, we're going to see quite a few headwinds later in the year with the monetary tightening that's going on and stuff like that. So that kind of lines up with the idea that that major capitulation may be yet to happen, and we may see that over the next, say, 6 months at some point. Similar story on the long-term holders, though they don't, you know, you need major long-term capitulation as well to put in those big bottoms where we got in 2019 and March 2020. We did get capitulations out of the long-term holders as well. And we've seen nothing from the long-term holders so far, basically, right? Again, suggesting that maybe we haven't seen that for this cycle. We haven't seen that major low been put in just yet. Okay, so that's kind of what I'm gleaning from the metrics from the on-chain stuff this week. All right. If we then go to the vol space, obviously, which you've all been waiting for. So realized vols, I'd mentioned, you know, realized vols were trading at pretty hefty premium last week. Bitcoin realized spiked to about 90, implied wasn't kind of moving with it. And I said that was likely going to converge probably from realized stabilizing, then implied jumping at 20 points. So that's exactly what happened, right? So the blue lines come back down. The implieds have traded a bit higher over the course of the week in the order of magnitude of 5 vols maybe. But really it's the realized coming back from 90 back down to kind of, you know, at 80 level, 95 to 80 level. So you've seen that spread move from around 20-25 vols back to around 5 vols, which is much more normal. Okay. Because it's been quite an orderly move down in Bitcoin over the last week. We have pulled back, but we haven't done it in really dramatic fashion. Okay. Now, what else are we looking at in crypto vol term structure? So what has the term structure done this week? If we bring up this chart here, we've got inversion kind of being maintained, right? So, you know, historically, you know, when the curves go inverted, they often don't stay that way. They collapse back down into contango when realized stabilizes, right? But the implieds were trading at a discount. So as the realizes come back in, realize is still a little bit higher. It's not massively high, but it's still a little bit higher than implied. So implieds haven't really needed to come down. And if anything, on the week, they've actually rallied. So you've seen super short dated implies like 1 week stuff come down a little bit, but we know where that's coming from. That's from the DOV pressure on the sell side. But anything else like middle of March onwards has stayed bid and actually gone higher, right? And we've got this inversion where the peak in the curve is late March, and late March kind of encompasses what's happening right now in markets, which is obviously the period of stress that we're going through. We're hopeful in the best case scenario, maybe we get some de-escalation by the end of March. But right now, that end of March expiry is the peak. But it also includes FOMC, right? And FOMC is thought of as an event that's going to induce some volatility. So it makes sense that the peak of the curves kind of coming in at mid to late March. And then we're kind of coming back down. But we're even seeing a bit of a bid in that medium-term part of the vol curve of around 5 vols in September and December, as in general, that stuff was trading quite low. And when you've got this type of, you know, game-changing geopolitical risk, just generally vol everywhere does catch a bit of a bid, right? So we're seeing buyers across the curve, okay? And then skew-wise, and like I say, here you can see on the right, this kind of paints the picture of each individual maturity and what that's been doing. And whereas last week we've been seeing wild gyrations in the curve where you had the pink trading higher, so that's an inversion, then you go back to contango, then back to inversion, then back to contango. You've actually seen a bit less vol this week, where you've got the short end part of the curve just staying elevated and above the medium term part the whole week. And you've had that medium part of the curve drifting higher throughout the week, basically, right? So less vol, but just a persistent drift higher in vol throughout the week is what we're seeing. Yeah. And then if we then move over to skew and what that's been doing, here you can see that we did obviously get to more neutral skew last week when we got that pop in crypto. But then as we've sold off, there's been a bit of buying demand come back. and the put skews kind of widen back out again, particularly in the 1 week, 2 week, 1 week to 1 month area, basically. So the longer term skew is still kind of around neutral. It's not very far off neutral, but the short term skew has caught a bid. I still like that medium term skew for macro hedges, right? If you're long crypto, you don't want to get rid of it, but you don't like the macro picture, then those longer term risk reversals in kind of June onwards are providing you a pretty cheap level of skew to get those risk reversals in place and feel comfortable that you're kind of protected for a larger drop that we may well see. Yeah. And then the last thing kind of to look at is the flows, right? So we're seeing, unlike normal, we're kind of seeing, gamma buyers, right? So obviously normally we see gamma sellers from the DOVs systematically, but with what's going on in the world, with the VIX spiking above 35, just a lot of risk out there, people are like looking at crypto vol and saying, well, actually, gamma around 70 vol feels cheap, right? So you can see here on the big paradigm blocks that have gone through, we saw 18th of March strangles being bought in decent size in like over 1,000 contracts. That was the 3,400 puts and the 4,200 calls. Okay, so a gamma buyer there in crypto. I actually bought some gamma as well back end of last week. I just used the weeklies. I used the 11th of March and I just did a straddle. So I bought the 42,000 straddle and then I sold like an April strangle against it with the idea that the market was going to not stay at 42 and was going to move. But I didn't think April implied vols would explode basically. So I was using that as a funding leg to own some kind of really short dated gamma. And that trade worked okay for me. Then we're also seeing June call spreads, 45, 60 call spread. That's been quite a dominant flow that we've been seeing over the last month or two. Seeing more of those going up in decent size again in like nearly 2,000 contracts. Again, I don't know if it's a buyer or seller this time around, if it's someone puking them and exiting, or if it's just adding to the position. My suspicion is market hasn't really moved enough. So they're probably just adding, right? I don't think it's a take profit or anything like that. And if you're going to do a June trade, you're probably not going to puke it already in March. So it's probably just adding to the position. And then if you look at Ethereum, really the standout flow has been protection buyer, again in 18th of March expiry, but of the 2,200 puts. So a real bit of crash protection there in monster size in about 20,000 contracts, decent clip there. And again, using that 18th of March because it contains the FOMC. So maybe whoever's doing that is thinking, I want protection for that FOMC meeting because I think that could really bring about the last leg of that crash, basically, right? So we'll see if that's how it plays out. So that's kind of what I'm seeing in the flows in crypto. And then the last point, as always, DOVs continue to sell. That flow is not going anywhere, but it's kind of being overwhelmed by world events right now and the fact that the risk in volatility, cross-asset volatility is going up. So even if you've got this big sort of seller of front-end gamma, the market can absorb that better, right? And so, I did the usual opportunistic strangle sale last Thursday night, which happened to also be the time where there was fears of a nuclear reactor meltdown in Ukraine. So I got a bit nervous and kind of bought a put against it to kind of cap the downside on the put leg. And then I just ran it overnight and then bought it back pretty damn sharpish at around 11 in the morning on the Friday after the DOV selling was done. So I didn't really make my usual 10 vol points out of that trade as I would have liked, but I still managed to nick a little bit of theta over it through it overnight. And like I said, I got the hell out of Dodge, bought back the gamma and actually flipped my book slightly long gamma because, I didn't think that it was just a pure front running the flow type trade. But I actually thought vol was relatively well priced, if not cheap, for the risks that are out there. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.